3 reasons for Bitcoin's decline. Bitcoin is falling again for the 4th consecutive day. Last night, the most popular cryptocurrency plunged to $54.5 thousand. Following Bitcoin, other major cryptocurrencies are also depreciating. July's decline could become the largest since the collapse of the FTX crypto exchange. Why did Bitcoin drop so sharply? What lies ahead? Experts name at least 3 reasons for the sell-off: cooling interest in spot ETFs, the beginning of payments by the bankrupt Japanese exchange Mt. Gox, and the risks of moving 50,000 tokens confiscated from internet criminals by the German government to exchanges. Ether ETF issuers are preparing for approval as early as mid-July, citing positive feedback from the U.S. Securities and Exchange Commission. If funds including BlackRock Incorporated, Fidelity Investments, 21 Shares, and Invesco get the green light, one of the key questions is whether Ether portfolios will generate anything similar to the demand caused by the historic January debut of U.S. spot Bitcoin ETFs. The latter accumulated $52 billion in assets. However, interest in exchange-traded funds that directly invest in Bitcoin has waned, echoes of the exit from Grayscale Bitcoin Trust and high inflation making investments in treasury bonds more profitable than playing with crypto. Meanwhile, the market has to digest volumes from Mt. Gox. The bankrupt exchange will return about $8 billion worth of Bitcoins to creditors over the year. The distribution of Bitcoins from the Mt. Gox platform has begun. Over 52,633 Bitcoins, $3.07 billion, were transferred overnight. The decline is mainly due to psychological impact, analysts note. Analysts also point out a sharp rise in long position liquidations and pressure on miners due to decreasing profits. Daily miner revenue has dropped by 75% to $26.5 million since April, according to CryptoQuant data. The $51,000 to $52,000 range is critical, as many Bitcoin miners are approaching the break-even point, noted Leo Scher, head of trading at market-making and algorithmic trading company Oros. One of the largest Bitcoin miners, Marathon Digital, sold 390 Bitcoins in May and plans to sell more tokens to manage its finances. According to Keiko Analytics aggregator, the risk of forced Bitcoin sales by miners may persist in the coming months. Following Bitcoin, other major cryptocurrencies such as Ether, XRP, and Cardano are also depreciating. However, according to Caroline Moron, co-founder of digital asset derivatives liquidity provider Orbit Markets, the return of American investors after the holidays should stabilize the market. What lies ahead? Sentiments in cryptocurrency can change quickly. For instance, if weak U.S. economic data prompts the Fed to ease monetary policy. Or if there is a change in the interpretation of political events in the U.S. Expected approvals for U.S. exchange-traded funds investing in token number 2 Ether could also lift crypto speculator moods. There's no particular excitement on crypto markets right now, noted Stefan von Hennisch, head of trading at OSLSG Pte, as quoted by Bloomberg. He also added that the current news flow is mostly bearish. According to von Hennisch, cryptocurrency needs the Fed to ease monetary policy. 1 or 2 rate cuts combined with the Fed's balance sheet expansion are the 2 key components that cryptocurrencies are really waiting for. Investors are waiting for U.S. employment data to understand the Fed's policy prospects. Weak recent economic reports have strengthened the case for easing the regulator's monetary policy in the coming months. The softer the Fed, the greater the appetite for risk. As for the Biden-Trump drama, it all depends on who will ultimately represent the blues in the presidential election in November. One scenario is that a stronger candidate from the Democratic Party will emerge, complicating the life of Republican Donald Trump, whose program favors the crypto industry. Lack of liquidity, the seasonal factor, also plays a role. It always falls in summer. Consequently, money flows from overheated tokens, like Pepe, into promising or oversold ones. Additionally, stops traditionally act as liquidity providers. For example, TON grew by 4.3% with a volume of only $300 million considering all futures with huge leverage. This means that even small money could move the price. All this is called a thin market. It can be profitable, but drawing far-reaching conclusions is not advisable. But observing Bitcoin's decline, analysts ask another question: is the massive exit from crypto a precursor to a potential downturn in traditional markets? The MSCI Global Stock Index has reached a record level, and the short-term correlation between Bitcoin and the index is decreasing. Speculators are now studying Bitcoin charts to see if tracked technical levels will hold or decline. The cryptocurrency has just closed below its 6-month moving average. Such turns predict new losses, based on historical data. Bitcoin's technical picture has worsened. The price has fallen below the 200-day moving average, which may indicate a trend change. However, it's still too early to say for sure. Grayscale research experts expect a recovery in the cryptocurrency market in the coming months. In our opinion, the macroeconomic backdrop remains generally favorable for the cryptocurrency asset class, combined with a growing economy, potential Federal Reserve rate cuts, and active stock markets, stated Grayscale Research, adding that they remain optimistic about the digital asset market until the end of 2024.